As I walked out the door towards my freedom, I knew that if I did not leave all the anger, hatred, and bitterness behind, that I would still be in prison. Nelson Mandela. Isn't this statement so true even for us forex traders? We are in the prison of our own thoughts and our own I'll get the money back mentality. We need to walk out the door, walk towards our financial freedom. We need to have a plan and stick to our plan and not let the anger, hatred, and bitterness pull us behind. Hello, this is Huskins, your Forex mentor. Welcome to your daily review of June 11th and the preview of Wednesday, June 12th. Your daily dose of events that shaped the Forex markets. We have an awesome one for you today. Let's get started. Our June record still holds a 100% win rate. That's what the results are. Let's see whether this week is any different. Um, I'm cautiously optimistic about this week, and we'll find that out very soon when it begins. Okay, now in relevant news from all over the world, the ECB will not buy bonds to save states from insolvency. Now, basically, the central bank launched the potentially unlimited, underline the word unlimited, bond buying program in September to reduce crisis stricken countries' borrowing costs and defend the basic concept of euro. Now, the this was in relation to the German court hearings, because the person, the European country who has to uh, bear all the risk of the unlimited bond buying is Germany, and there is a case going on right now to see whether this is even constitutional, or are the Germans holding too much of the risk. And the hearing is expected to be out in September. Now the German court hearings to see whether it infringes on the constitution's insistence on sovereign parliamentary control over budget matters takes place on Tuesday and Wednesday. So basically, we'll have all the hearings out on Tuesday and Wednesday, but the court decision again will not be out till September. Now, what is all this fuss about? The ECB president Mario said that he the bond buying program, which had not yet started, will not be used to save states from bankruptcy. It's not that if a state can just look to that and it's not like a bailout for the state. That's at least what he said. It. He thinks that the reason why the unlimited bond buying program exists is that the countries which are not as risk worthy as maybe countries like Germany um, don't have to pay a more a higher amount of spread. What is the spread? A higher rate of interest to borrow money from the market. So now, if ECB is going to buy back the bonds, what will happen is that the market will not be able to charge a very high premium on bonds from countries which does not have a very high credit rating. Basically, you're trying to interfere in the market and kind of level the playing field. In other news, the S&P Upgrades US outlook. S&P is the only credit rating agency to have downgraded the US from a triple A status. But now what they say is that we believe that the US economy performance will match or exceed its peers in the coming years. Um, the way S&P or any other credit rating agency works is that it does not just all of a sudden change the you know, outlook, or from a AAA status, get it down a notch. No, it does not do that. What it does for companies or for countries is that it gives its outlook, and then it revises its outlook, or basically it's signaling um, to the economy as a whole what it intends to do, so that there is not a sudden knee-jerk movement. Now, this is something very interesting. The Bank of Japan fails to talk about volatility, and the Nikkei drops and the yen rises. Now, the analysts were expecting no action from the Japanese central bank, but many were hoping for additional steps to ease recent market turbulence. In short, what they were expecting is, the Bank of Japan to reiterate that they're going to print off the yen, and they're going to keep on backing the uh, you know uh, the shorting of the yen. That means that the yen will keep on weakening. Now, this disappointment was reflected in the yen, which strengthened up to the 98 handle per dollar from its previous level of 98.9. The Bank of Japan is sending a message that at the end of the day, it's a central bank, and it will not pander to the markets too much. Let me pull up a chart just to show you. Okay, so um, during the non-farm payroll day, what we saw the price from 2 a.m., which was a trade which we took, drop down to uh, you know the lowest possible just before non-farm payroll, and it came up, and it continued to move upwards. All right, and then when we had the Bank of Japan statements out, um, it started losing its steam and started falling down. So that's exactly what is happening right now, and it's towards the 96 level. Now, has this changed my outlook? No, my outlook is hasn't yet changed, and I'm expecting the Euro USD, sorry, the USD JPY to reach my 105 mark. That is something which I'm still expecting. But is it going to be simple? No, it's not. Nothing's going to be simple. But that's a level which I'm going to be expecting. So let us look at the bigger frame and see whether where it goes from here, and whether we should put in a longer term buy orders right now. Okay, we are on an uptrend. What a lot of folks will be looking at is a head and shoulders pattern, which would signal an end of this particular uptrend, is what they would be looking at. But I'm not a technical trader. I don't care about this shoulder and this head so much. What I'm looking at is the fundamentals, and my expectations are that we could see the yen drop down to as low as 95ish, and then again look look to go back up. So um, if you are going to go long on the yen, my advice is that you do not um, you the yen's going to try and flirt with this particular low, so don't try and do that. That's my only advice. um, if you can hold on to the yen well beyond these lows, then perhaps we could have a great win on our end. But it all depends on your own risk tolerance. So that's about it for the yen. Now, in other news, the global market is recovering, but it won't take place in the same way it has happened in the past. Now, emerging countries led by Asia, Africa, and Latin America will soon control half of the world economy, up from a third currently. This is what the Scotia Bank's chief economist Warren said in a conference in Montreal. Now, this is also a very little niche. The too big to fail companies. N- Now, what are the too big to fail companies? Well, basically, the too big to fail companies are systematically important financial institutions which are by the new Financial Stability Oversight Council a regulatory watchdog. What it means in practice is that because there are companies which are thought to have significant enough influence to blow up America's economy, they should get special attention. So now this list is supposed to be secret, but AIG and Prudential, two insurers, this week confirmed that they were in it. Now, even the GE Capital, confirmed that it is also in it. Now, these firms and perhaps others have joined what is called the too big to fail list, wherein the U.S. government is going to back these firms up and not allow them to fail. So in short, if you're looking at shares from these companies, they are not going to trade at at normal market. When the market tanks, they're not going to tank as much as they should. When the market rises, there could be a little lag in the amount of worth the market provides to them, because with excess of regulation, there is a regulatory burden which is put on to these particular institutions, which may not allow them to function as well as they would otherwise have. So, so that's about it for the review. Let's look at tomorrow. Tomorrow is actually a very busy day. Well, it starts off at 4:30. I'll be looking to trade the UK claimants count. Last month, this was a painless, easy 40 pip trade. Now, at 5 p.m. in the afternoon, I'll have the New Zealand official cash interest rate statement. This was a no trade because of the ATR last month. But in March, this trade yielded anywhere from 40 to 60 pips. Then later on at 9:30, we have the Australian employment change. Now, this is I want to be very careful about this trade as the last four releases have resulted in two losing trades. So I am, I'm going to be very cautious about this. Not that I'm not going to be trading this. I'll be reassessing this trade plan, and I'll let you know if this trade plan is still valid for this release. So by you should expect an email by 5 p.m. tomorrow letting you know one way or the other, or if I'm changing the trade plan on this. So that's about it, guys. Have a wonderful day. Bye for now.